On June 12, 2026, SpaceX completed the largest initial public offering in the history of the stock market, raising $75 billion. That capital raise established a corporate valuation of $1.77 trillion, making Elon Musk the world's first trillionaire within the first 20 minutes of trading. Yet this valuation coincides with massive operational losses. Even with Starlink revenue factored in, the company's internal financials report a net loss exceeding $4 billion annually. Understanding why investors paid a premium for a business burning that much cash requires looking away from the launchpad and into the legal fine print of the S-1 prospectus. The S-1 prospectus legally transformed SpaceX into a vertically integrated conglomerate, merging the industrial reality of orbital launch with the speculative scale of frontier AI. For years, analysts expected SpaceX to execute a clean spin-out of Starlink. Its satellite division generates over $11 billion in recurring, highly predictable subscription revenue, the specific profile public markets usually reward. Instead, the S-1 revealed that Musk had integrated his struggling social media platform, X, and his AI startup, xAI, directly into the aerospace company. The resulting corporate structure creates an ecosystem that spans orbital launch, global telecom, and artificial intelligence compute. This integration traps Starlink's profitable cash flows inside the parent company, where they fund capital-intensive projects across the other divisions. The prospectus also details an executive compensation model where Musk receives $0 in cash salary. His compensation is driven entirely by stock grants vesting upon escalating milestones, culminating at $7.5 trillion. To receive that payout, Musk must also establish a self-sustaining human colony on Mars with at least 1 million inhabitants. By writing these requirements into an SEC filing, Musk effectively forced the global financial markets to legally underwrite his personal multiplanetary vision. That filing immediately drew backlash from fundamental analysts who argue the company's internal math is disconnected from reality. This bar chart visualizes the claimed $28.5 trillion total addressable market. Traditional launch services are a tiny fraction. The majority relies on speculative enterprise AI, pegged at $22.7 trillion. Critics argue that the entire IPO is essentially a bailout for the losses at X and xAI. The filings show a structural inversion, where massive AI compute leases now must subsidize the shrinking advertising revenue at the X social media platform. Simultaneously, the billions generated by Starlink's satellite subscribers are being consumed by the massive development costs of the Starship rocket system. Maintaining a $1.77 trillion valuation requires investors to look past standard profit and loss metrics in favor of the hope for infinite future growth. Despite these concerns, institutional demand was overwhelming, with shares closing their first day of trading up 19% at $161. The market impact was immediate. Traditional aerospace and terrestrial telecom stocks dropped as investors priced in SpaceX's dominance of the orbital domain. On launch day, the IPO transformed roughly 4,400 current and former SpaceX employees into instant millionaires. The exit also returned more than $60 billion to early venture capitalists and institutional investors, injecting massive liquidity back into the private markets. This liquidity event will likely trigger a PayPal mafia effect, where newly wealthy engineers and investors leave to self-fund a new generation of space startups. The IPO provided the capital for Musk's Martian colony, while simultaneously creating the liquid wealth necessary to fund dozens of competing space startups.